Today, we're diving into Rocket Lab USA Inc., an aerospace company that's making waves in both launch services and space systems. We'll be looking at an overview of their operations and financial performance as of January 11, 2026, drawing insights from publicly available financial reports, company announcements, and market data, including compilations by quiverquant.com.
That's right. Rocket Lab's core mission centers on providing reliable access to space, primarily through small satellite launches. But they're also building out end-to-end space solutions, which means everything from manufacturing spacecraft to providing satellite components and mission services. They're targeting a broad range of customers across commercial, government, and defense sectors, with a strong focus on rapid, dedicated launches and vertical integration to keep costs and timelines down.
So it's not just about rockets then. They're trying to cover the entire process. What are the main vehicles and operational sites that enable this?
Their primary workhorse is the Electron rocket, which is a small-lift orbital launcher, but they are also heavily investing in the development of the medium-lift Neutron rocket. For launches, they operate Launch Complex 1 in New Zealand and Launch Complex 2 in Virginia in the U.S. They're also preparing Launch Complex 3 for the Neutron. They've already completed over 50 Electron launches, and their goal is to keep increasing that cadence.
50 launches is quite a track record. When we break down their operations, what are the key segments driving their business?
There are two main segments. First, launch services, which involves those Electron rocket launches for deploying small satellites. This includes mission management and flexible rideshare options. The second is space systems. This is a higher margin segment that encompasses everything from satellite buses and separation systems to solar arrays and reaction wheels. It also includes contracts for building and operating spacecraft for clients like NASA and defense agencies.
It sounds like they're diversifying their revenue streams. Let's look at their latest financial metrics, specifically from Q3 2025, which ended September 30, 2025. How did they perform?
Q3 2025 was a record quarter in some respects. Revenue hit $155 million, a 48% increase year over year and 7.3% quarter over quarter. This growth was driven by both increased launch activity and space systems contracts. However, the company reported a net loss of $18.3 million, though their diluted EPS loss of 0.03 cents per share was better than analyst expectations.
A record revenue quarter, but still a net loss. That's a common tension we see with high-growth tech companies. What about their gross margins and backlog, which can give us a sense of future revenue?
Their gross margin was strong, with GAAP at 37% and non-GAAP at 41.9%, which they reported as record levels, reflecting improved efficiencies. Their contract backlog is also quite substantial at $1.1 billion, an increase from prior quarters. About 57% of that is expected to convert into revenue within the next 12 months, which provides a good outlook.
That's a significant backlog. What were some of the operational highlights during that Q3 period beyond the financials?
They secured a record 17 Electron launch contracts in Q3 and completed multiple launches, including 2 hypersonic accelerator suborbital test Electron missions. They're on track for over 20 launches in 2025, which would surpass all their previous annual records. However, this growth also comes with costs. Research and development expenses were $70.7 million, primarily reflecting ongoing investments into the Neutron rocket's development.
So, the investment in Neutron is substantial. Can you elaborate on how each segment, launch services and space systems, is contributing to revenue and what their growth strategies are?
Launch Services contributes consistently through Electron missions, seeing strong demand for dedicated small satellite deployments, benefiting from their high launch cadence. The Space System segment, though, is driving a larger portion of revenue, and with higher margins. This includes significant projects like building twin spacecraft for NASA's Mars Escapade mission, as well as component sales. This segment also grew through strategic acquisitions, such as GEOST, a company specializing in electro-optical sensors, acquired for up to $325 million.
It seems that focusing on these higher margin space systems, including strategic acquisitions, is key to their long-term profitability. Looking ahead, what was Rocket Lab's guidance for Q4 2025, issued in November 2025?
They projected total revenue in the range of $170 million to $180 million for Q4, with GAAP gross margins of 37% to 39%. They also anticipated an adjusted EBITDA loss of between $23 million and $29 million. If you consider the midpoint of that revenue guidance, their implied full-year 2025 revenue would be approximately $600 million.
That's a significant growth trajectory. Shifting to market sentiment, how has the stock been performing, especially leading up to January 11th, 2026?
The share price was around $85.94, with its market capitalization at about $45.29 billion. The stock has seen considerable volatility and growth, up 67% in the past month, 174% throughout 2025, and continued to rise in early 2026. However, its P/E ratio stands at negative 218.85, which reflects those ongoing losses amid their heavy investments in growth and development.
That negative P/E ratio certainly underscores the investment phase they're in. What have been the most impactful recent developments driving the market's attention in January 2026?
The biggest news is an $816 million contract with the U.S. Space Development Agency, which is their largest to date. This contract is for building and operating 18 satellites for the Proliferated Warfighter Space Architecture Tranche 2 beta program. This defense win significantly boosts their backlog and highlights their growing role in national security space missions. The stock surged after this announcement, also amid broader positive momentum in the space sector.
That's an enormous contract and a clear validation of their capabilities in the defense sector. What other developments are contributing to this positive news flow?
They've also been on-ramped to the National Security Space Launch Phase 3 Lane 1 contract, a $5.6 billion pool for rapid response launches, which adds another layer of potential government business. And crucially, there's significant progress on the Neutron rocket, with its first launch still targeted for early 2026, alongside the opening of Launch Complex 3. The updated budget for Neutron development was approximately $360 million through the end of 2025.
So, major defense contracts and the advancement of their next-generation rocket are fueling investor optimism, despite the continued R&D expenses. Analyst updates and social media buzz also seem to reflect this excitement.
Precisely. Analysts have been issuing new, higher price targets, recognizing their accelerating success and the tailwinds from defense contracts. There's also significant social buzz, with speculation about the stock reaching $100 per share soon, and its inclusion in prominent space-themed stock lists.
It's clear Rocket Lab is in a dynamic phase, balancing heavy investment in future capabilities with securing major contracts and demonstrating strong revenue growth in their existing operations. It will be interesting to see how these developments unfold, particularly with the Neutron rocket's maiden launch. If you found this discussion insightful, share this episode with someone you think would appreciate it.